So the different options for funding currently available for inventors today are your typical crowdfunding sites that have become really popular. The inventor services is what we call it, that align you with the licensing partners you need as far as that goes. And then you have your traditional banking, if your finances are strong enough to borrow money off of. But what we like to offer here at Alotech is what we call alternative funding. And it really surrounds itself with looking at supply chain management, where we can help that inventor leverage the vendors that he needs to save money on manufacturing their product. So what we typically like to do is look at the negotiations, because currently or typically they are currently using a lot of web-based buying, your Alibabas, your Amazon, wherever they can buy the stuff, the components online to integrate their parts. And they're usually buying in lower volume, which is understood because capital is always tough to raise in the beginning. Your pre-sales evaluations are always tough. Once you've got some sales under your belt, you can typically go to different places and that are attracted to companies that have sold their product before. For the inventor is streamline their supply chain, leverage our buying power here so that we can purchase, we can give those vendors a blanket purchase order for a year-long monthly draws on different types of products that we need. And but what it really goes back to is the only reason we offer that is so they can focus on the selling and the marketing side of their business, instead of trying to figure out where they're going to buy this nut or this washer or this part, where they're going to try to save a nickel here or a nickel there. We look at the big picture and how we can help them come up with a creative way to negotiate properly, to get the cost of their parts down. We like to look at how to really craft the deals with those vendors, how to utilize their funds instead of our own. And because most people look at, okay, here's a standard way you have to do business. We look at everything from, what are the terms with that vendor? How far can we stretch them out, on their behalf, as far as trying to leverage and keep cash flow in a comfortable position, because everybody knows starting up a company, cash flow is your biggest challenge. You can be a profitable company, but mismanage your cash and go out of business. I've seen it happen multiple times. So our big push is to get them to think about thinking outside the box with alternative ways to fund things. And Alotech really has a strong stance in that market where we can leverage those relationships that we currently have for manufacturing and purchasing power, and that'll help these small businesses really scale a lot faster. Investor and Alotech's alternative investing is really where we don't typically take equity in that company to invest in their business. What we try to do is leverage the upside potential. We try to leverage the differentiation of their product versus what's already known on the market, and where we try to make our margin so we continue to invest in other companies is we try to make our margin on buying the product, buying the pieces and parts at a much more reduced rate. So we bring a lot to the table from the supply chain management that an angel investor, he's just going to give you some money and say, here, I want 10 or 20 or 50% of your company, but I can't help you with supply chain management. I can't help you with manufacturing. I can't help you with design changes. I can't help you with sourcing anything, but I can help you with funds. And that works fine for people that have a good knowledge for manufacturing processes and putting those quality processes in place, putting the procurement processes in place. But where we really excel over an angel investor is we just help the inventor execute. We do get involved in their strategy. We're a big believer in Gazelle's one-page strategic plan. We walk all of our clients through that process because we want, and we do this before we invest in their companies most of the time, or invest in their inventory management or their manufacturing their product for them. We walk them through that one-page strategic plan and help them understand what a good strategy is. But most of the time we're just asking the question. They already have the answers. We're just trying to compile it into something that's legible, that's not hopes and dreams. It's factual information that has due dates and who's going to do it and when it's going to get done by. We're big believers in what gets measured gets done. So that's how we're different than a typical investor. One key thing that Alotech does different than a typical investor as far as their financial planning goes is if, let's say we're only interested in investing in just the hard goods, we will help them find other investors that may be interested and may be better suited for manufacturing, because there are a lot of investors that love to invest in property and love to invest in low capex companies, but we tend to invest in the equipment and the materials and the manpower to take their product to market. But what we don't do is we don't really invest in the marketing and the sales efforts. So we view that as just as important. And so what we try to do is help them find investors that can help them use that money and that equity to invest in their marketing and sales. But yes, we do have a network of investors that like that type of risk, and that's really what you're looking for is an investor that's comfortable with the risk of a manufacturing company that requires some assistance getting off the ground. So a good percentage of our customers currently use multiple streams of financing. We just usually come at the cheapest cost. Because if you're looking for an outside investor just to put cash in, that's going to come at a lot higher equity cost, where we try to stay away from equity. If anything, we'll take, let's say we've taken several companies to sale, from an invention to a sale. What we try to do is if we do add something onto our traditional just cost plus model, is what we'll do is, okay, if your company's worth $1 million pre-sales, and then in 2 or 3 years you sell it for $5 million post-sales because we've helped you create the sales through manufacturing, we may get a 2 or 3% of the delta of what that's worth. So that'll be an incentive for us to help you grow. But otherwise, we really just rely on our buying power to save money, and then we typically try to what we call the Alotech share program, where if you come to us and your current cost of goods is $50 and we can drop that down to $20, we'll give you $15 savings and we'll keep $15 of the savings, because we work to help you acquire that savings.